And what we just executed in the last couple of weeks was a total refinancing of our capital structure. And as such, we now put in place a $200 million facility with TP Birch Grove, which allows us to have all the capital we need, and we can service that capital without any concerns on cash flow all the way through 2029.
All right, welcome back inside our proactive newsroom. Joining me now is Jeff Miller. He is the CEO of Synchronous Technologies. And Jeff, great to have you back again. How are you?
I'm terrific, Steve. Thank you very much. Great to be on the program.
Yeah, so the company out with your Q1 results, solid results, a lot of different areas that we want to address. First off, why don't we just give some overall thoughts on what you thought of the numbers?
Yeah, first off, at a time when there's macroeconomic uncertainty and lots of rhetoric around tariffs, we're pleased to have delivered just as we anticipated. So, consistent with the consensus expectations in the market, or higher in the case of our profits, we generated $42 million of revenue, very much in line with the consensus expectations. And our EBITDA was up 17% on a year-over-year basis. Even better, our margin performance continues to improve, such that we delivered greater than 30% EBITDA margins in the quarter. That makes us feel good. And probably the best part of the results was the fact that now we're up to 93% of our top line revenues are generated on a recurring subscription basis. And that should give good visibility to our investor base, as well as to us running the business, that we have a very clear line of sight to the future.
Yeah, and Jeff, maybe you could just address that a little bit more, because I think people need to understand the importance of recurring revenue. It can be a real stabilizer for a company.
It is. In our case, we participate in a portion of the cloud revenues generated by our customers. So Verizon and AT&T charge for Verizon Cloud and AT&T Cloud respectively on a per month basis. We participate in that revenue stream. And as a result of that, that's considered recurring or subscription revenue. That is what has continued to grow. And in this year, in this quarter, it grew over last year's performance as well. So we like recurring revenue. It's a gift that keeps on giving. And it's also a clear sign of the loyalty that our customers have to our platform based on what value they see from it.
Yeah. So Jeff, that's the sort of the talk about the number side of things, but you're also able to do stuff on the balance sheet as well that really makes a huge difference as far as debt is concerned.
Again, in uncertain times, it's great to have a long-term certainty in your future. And what we just executed in the last couple of weeks was a total refinancing of our capital structure. And as such, we now put in place a $200 million facility with TP Birch Grove, which allows us to have all the capital we need, and we can service that capital without any concerns on cash flow all the way through 2029. That again, great solid foundation on a business that is generating strong recurring revenue with clients that we have long-term contracts with. So in all of those combined, we put ourselves in a position to provide a nice, predictable business model for our investor base, and a very solid operating performance for our company and our employees.
You mentioned that you're off to a good start in Q1. You also reaffirmed your full year guidance as well, between $170-180 million. Having a strong first quarter really makes that plan that you want for the rest of the year have a great start to it.
Yeah, it's terrific to start the year just as you expected, not see any deviations really from plan. All of our largest three customers, AT&T, Verizon, and SoftBank, are at or ahead of our expectations for the year. So that's a nice set of foundations on a stool, if you will, to build off the rest of the year. And we've got some new prospects that we're talking to our platform about, and we think that we could see new customers join the fray before the end of the year.
Well, good start to the year, Jeff. Congratulations on the numbers, and we look forward to our next conversation, okay?
Thank you, Steve. It's always great to be on the program, and we appreciate the opportunity.
All right, there's Jeff Miller, the CEO of Synchronous Technologies.